Welcome everyone, and thank you for joining me for the sixth of today's sessions, which we've called Where Are the Opportunities in the Green Economy? I'd like to start by thanking Next Energy Capital for sponsoring the event. My name's Alex Newman, an Associate Editor at the Investors Chronicle, and I'll be hosting the event. I'll introduce our brilliant group of panelists in a moment and jump into our discussion. But before we do that, a few quick bits of housekeeping from me. So we've already had a good number of questions submitted to our experts. But if you want to ask them a question, please do so. You can still do that in the box marked Q&A on the right-hand side, I think, here of your screen. And I'll aim to weave some of them into the discussion at the discussion and some at the end as we go. So, secondly, I'm told a recording of this webinar will be available later today after the event has finished, and then on demand for 30 days, accessible through the same link you used today. So you have plenty of time to listen back to the discussion at your leisure. Other useful links, resources, and the feedback link can also be found above. Great, so let's get to it. So in the invite you received for this session, the blurb talks about how combating climate change has become a global priority. Investors looking to have a positive impact on the planet while maximising returns have responded by seeking greener investment opportunities. But ambiguity around what is considered green, combined with a lack of existing frameworks for due diligence, has led to a widespread uncertainty about greenwashing and green bubbles. And since the start of this year, world events have presented significant reasons to challenge investors' commitment to the green agenda. So in this session, we're going to talk about some of the steps which investors can take to guarantee the positive impact of their investments, including due diligence, spotting and avoiding greenwashing, and identifying risks and rewards out there. But first, let me start by introducing our panelists. In no particular order, we have Cleona Lira, a chartered financial planner with Celtic Financial, a financial advisory practice which focuses on helping investors align their portfolios with their values. Jeannie Boyle, executive director at the wealth management group EQ Investors, which helps charities and high net worth individuals build bespoke approaches to sustainable investing. Tanya Payne, an investment advisor and head of sustainable investment at Into Planning, current co-chair of the Ethical Investment Association and former vice chair of the UK Sustainable Investment and Finance Association. And finally, last but not least, Ross Greer, founding partner and managing director of Next Energy Capital and a member of the investment committee for Next Energy Solar Fund, ticker NESF. In his career, Ross has overseen the development of more than 1 gigawatts of solar and battery projects for the UK market. I should probably start by saying that despite the significant financial planning and investment expertise on our panel today, nothing in this session should be construed as financial advice. And one last bit before we jump to questions. We also have a poll running for those of you watching, which is on the question, what are your thoughts on socially responsible investing? Your options: I don't care about impact, investments are about returns. I'm skeptical about ESG as an indicator of impact, so I focus on returns. I balance impact concerns with returns to make the best investment choices, or investments should seek to maximise positive impact, even at the cost of lower returns. I wonder where our discussion might influence some of those answers, but we'll be returned to that poll at the end. Okay, so that all said, let's try and start with the basics. Ross, how should we define investing in the green economy? Is it about picking companies that are gradually getting better at responding to the climate change, or is it those just focusing on those with the lowest emissions, or those who are offering solutions? Where's the starting point?
So I agree. It's a complex decision matrix that you need to look at in order to drive that decision point. But I think the first principles from my perspective, and we'll get into this in more detail, I'm sure, are that we need to decide with our feet and our capital the sort of society that we want to see in the future. And that should be paired with the types of investments that we're making, the types of businesses that we're supporting, either through our investments or that we are consuming product from. And I think that we are really starting to see that momentum really kind of take hold within the investor community, and we're certainly seeing that in the investor space. I'm relatively biased, of course. I work in a business that predominantly focuses on long-term asset ownership. So we own a significant proportion of the solar farms and battery generating capacity in the UK market. And we see that as a very good way for investors to directly take part in that green economy agenda. They can love, touch and feel the assets as we do, that we know and love and generate our returns from. So we're able to pair those attractive returns with the right ESG profile. And part of what we do as a business as well is focus on reporting and transparency and the consistency of the data that we're able to provide to our investor base. And from my perspective, as I look at my own shareholdings as well, I'm always looking at what information I can extract that goes beyond the straightforward greenwashing, again, a subject we'll come back to, and goes into exactly what tangible benefits are being delivered across that whole spectrum of the ESG space.
Great stuff. Jeannie, I mean, as Ross alluded to there, I mean, this space is evolving, expanding. There's plenty more investors, companies on board with the transition to a greener economy. I mean, is there an argument to make that perhaps staying passive is now still a viable option, given that this is now on everyone's radar? All ships are rising thanks to the same wave. What's your thoughts on that?
I think we need everyone on board to meet our climate targets and make sure that we stay on target for limiting warming at 1.5 degrees. And I think it's fair to say that not everyone is on board at the moment. And investors can play a huge part in perhaps engaging with those companies who are lagging behind to help them improve what they're doing. I think staying passive is not an option at the moment for anyone who is concerned about the future of their planet, because there is so much work yet to be done. And some of the big companies, some of the major fossil fuel companies we know are just not going far enough, fast enough. And this is where investors can play a part in helping to solve these problems. And I think thinking about the range of options you laid out there, I think there's space for everyone who's concerned about how their investments are supporting the climate. You can engage with companies and help make change that way, or you can invest in those who have already started to make the transition. So we're directing flows of capitals towards those businesses that are doing the right thing.
Excellent. Yeah, I mean, plenty to unpack there, engagement and capital flows, which we can come on to later on in the session. Tanya, just sort of staying with kind of first principles here. We've talked a little bit about how things have changed in the last couple of years. I mean, you've been looking at this space for some time now. What's your sense of how the sector has evolved in the last couple of years? And do you think it's starting to serve ordinary retail investors who want to be engaged?
It's changed enormously, and there are so many more opportunities than there were even a couple of years ago. When I started in this sector 15, 20 years ago, there were very, very few options. But now, whether you want to go active or go passive, do a blend of the two, as in many portfolios, regardless of your asset allocation, right across the spectrum of asset classes, there's much more choice. And to pick up on Ross's word, momentum, the momentum is behind the manufacture, if you like, of new options in the finance sector. So there'll be even more choice in a year to come. And if we look at the changes even in our own lifetime, so let's say for many of the audience perhaps born 40 or 50 years ago or more, the population on the planet was about 3 billion. Now we're nearing 8 billion and still rising. So the financial sector globally will continue to respond with new opportunities. And in terms of where capital is directed, to pick up on Jenny's word, we need everyone on board. The macroeconomy, the global macroeconomy, has to serve the needs of every one of those 8 billion. So there are a tremendous number of opportunities now.
I mean, absolutely. I suppose to focus on the macroeconomy for a minute. I mean, this year has seen the real resurgence of some of the old economy companies, stocks, which maybe disrupt to a degree to some people are saying it could disrupt the advance to a greener economy. I mean, oil and gas and defence stocks are soaring. BP's boss recently compared their upstream earnings to a cash machine, a comment which may or may not have precipitated the UK's decision to introduce a windfall tax. But whichever way governments respond, hydrocarbon prices are up and producers are making lots of money for their shareholders. Cleona, how do green-minded or sustainability-focused investors stomach the market right now? Because great, we've got opportunities emerging, but at the moment they're missing out on a lot of returns in the old economy.
Yes, I also want to say that in the old economy, ExxonMobil made a very clear move and called it a moral margin call, I believe, by exiting Russia. For any investor, it's painful to lose money, and we haven't had the greatest year in investing. And certainly energy has been a high-performing sector. And generally speaking, if you're invested sustainably, you exclude certain sectors, oil and gas, mining, certain kinds of energy that are non-sustainable. So they are feeling the pinch. And usually, like over the last 5 or 10 years, when you compare to benchmark or you compare to a mainstream investment, sustainable investors have more or less done better. And so it's not pleasant. At the same time, I see with my clients, they are quite philosophical about it and, aren't willing to change their ethics because of profits. And I admire that. Yeah.
So it's about staying patient, I suppose. Please, Ross, yeah.
Well, yeah. So from an investor's perspective or investment management perspective, we've seen the conversation change significantly over the last decade, as some of my fellow panelists were alluding to. The first conversations we had around renewables were very painful. We were angling for a conversation, being accused of being tree huggers as opposed to economists and various other very challenging, first raised conversations. That has completely changed now, right? The conversations I'm having today are about energy security, energy sustainability, price point for consumer, that whole energy trilemma, and how we can support society in this journey and how investors can flood in to that process. So I really don't share the fear that investors are going to turn their back on their continued drive towards societal benefit of the green economy. And reverse back to historic either buying processes or investment methodologies. I see both as running in parallel. What I think is right at the moment is, in terms of energy security, we're thinking we cannot pull that ripcord and step away immediately from historic generating processes straight into a green backed generation facility. We need to transition over time. We need, therefore, an entire mix to allow us to do that. We need to manage that roll-off sustainably. But I think that, the positive thing from my perspective is we definitely see, again, to say that same word again, we see the momentum from our investors towards wanting to make the right outcomes from society. So they want to invest in those green generating facilities over the long term.
Yeah, I think just on that point, Ross. Sorry, yeah, over to you, Ginny. Sorry.
I was just going to add, I think Cleona, Tanya and I all work with individuals on their financial plans. And I think the thing that I've noticed over the last few years in my work with families is they're looking to get the return on their investments that allows them to fulfill their objectives. It doesn't matter what the market's doing. It matters what your portfolio is doing and whether that's enough for you to do the things you want to do in life. And for a number of investors, we need to step away from this idea of chasing market returns and understand more about what's enough for you as an individual, and therefore what you need to take out of a portfolio to sustain your spending, rather than simply chasing after profit for profit's sake.
I actually think that cuts
very good point.
Yeah. Go ahead, Tanya.
Yeah. That's a very good point. If I just can jump back in there on, I just wanted to touch on a point that Ross, you were making about capital allocations. I mean, I find it interesting. Do you think high prices for hydrocarbons at the moment are almost under? And I don't want to dwell too much on the current market situation because we're thinking long term here. But obviously, oil and gas prices are sky high at the moment. Does that underline the need to transition away from old economy energy and towards cheaper renewables? Do you see that actually moving the needle in conversations you're having with capital allocators at the moment?
So, I think it's coming in a couple of different swim lanes. So, I think there's always going to be money to be made from that oil and gas sector for as far out as we can see, and therefore there are going to be increasing specialist investors that are able to make a really good return out of whatever that industry looks like in the future, not taking away from the fact that they are also doing some good work in transitioning the economy in some areas to a green agenda as well, right? So not getting into the greenwashing argument, they are making some good investments there as well. Alongside that, though, we see that there is a significant downward pressure from investors through their pension funds and from pension funds down the way into industry to ensure that capital is being deployed into that transitional technology, into the green economy, and that it is able to cleanly deliver ESG metrics back the way. Now, it is very difficult, I think, for investors to distill the volume of information around ESG at the moment to make the right investment choice day one. So I think it's a market that needs to continue to evolve, but I certainly don't see there being a disruption or a slowdown in capital being available for future green economy issues. And building on a point that Judy made there as well, I think the point from my perspective is we've been for decades driving the economy to grow at the cost of absolutely everything else, and that's how we've been wired to think that society is best placed. I believe that we need to move very quickly to growth of the economy, but within the bounds of sustainability. And that requires societal shift. That requires everybody to think differently about how they behave, how they purchase, how they invest, and all of those things we've touched on so far. And I talk often about the electricity market in the UK, and from my perspective, we grew up in a generation where you'd walk out of a room and leave a light on, not thinking about where that energy is coming from or how much it costs or whether it's sustainably generated. And I genuinely believe we need to change that mentality across everything that we do in order to get to the point where we're able to actively engage with all companies around their ESG profile and the green economy. Sure.
Yeah. Tanya, conscious that I cut you off a minute ago. I think I don't know if we were talking a bit then about I suppose what clients are feeling at the moment. What's the sense from the people you work with? Are they able to sort of stare through the currently what's going on in the world economy and focus on the long term, or do you get the sense it does impact a little bit on their investments and their expectations that come from them?
I think we're all influenced all the time by what's going on around us, but with incisive analysis and a big picture view, we are able to cut through that and see things more clearly. And it's very clear, listening to clients and those thoughtful, long conversations with them, that they are investing for the future. And what this whole session is about is fundamentally the future. And wind power, solar power, battery storage, tidal power, these are outstanding opportunities for above average returns. And they are things much more of the future than of the past. So if we look at the infrastructure that is around fossil fuels, which, as you say, generating very strong short-term returns. That will, over time, when we look at the Paris Agreement made by a couple of hundred countries, 2015, will become obsolete because legally binding commitments have been made by almost all the countries in the world to gradually, over time, cease fossil fuel production at anything like the current levels. And therefore, as clients think about where to direct their capital, they are very much thinking of their retirement, their children, their grandchildren, and the world that will exist when they and all of us on this session are no longer there. And the question is, yes, let's invest in our children's education, in our grandchildren's education. But what use will that education be to them if the legacy we leave behind is a world that is very difficult for them to live in? And you can see at the moment the floods in Montana swallowing houses, floods, heat waves in India and Pakistan. There have been flash floods and scorching days in the UK. So all of this points to a world that is fundamentally changing and changing fast. Yeah.
Cleona, I mean, there will be no end of investors out there who turn on the news. They see a shifting climate. They feel like they need to do something, but they look at the potential investments out there and they are baffled by the claims that every company is making. They're all doing good. They're all on board to some sustainable future. If a client came to you and said, I care about lowering carbon emissions in my portfolio, I want to have an impact, how would you advise them? They say they want to have the biggest impact possible with their portfolio. Where's the starting point for someone who comes to you at that point?
Yeah, at some point in the conversation, I try to take it away from individual guilt to systems and how we can move money flow with bigger impact. And when I think about money flow, I think of pensions, I think of charities and endowments. And we can't do it just focused on governments and charities. It has to be corporations too. We need corporations to make changes. So yes, you can make a little splash with your individual pot. But if we can get pension funds at your workplace to pay attention and engage them, not in a blamey kind of, just like in a positive, uplifting, engaging way, because as Ross said, we want to be clear on the kind of world that we want to live in and have a clear vision about it. And life is so beautiful and wonderful, and why not? Why should we destroy it for a few pounds? I read a statistic in the Make My Money Matter campaign that £2 out of every 10 goes towards deforestation if you're invested in non-sustainable investments, because there's a certain amount of the portfolio that's in timber or manufacturing or tobacco, where trees are cut. So rather than, focusing on reducing emissions, why not cut the forest in the first place? And the big money is not in your individual investment in pension. And also, if you don't have money to invest, in a pension or whatever, you can still make your voice heard by getting behind campaigns like Share Action, which do great work.
And
yeah, absolutely.
Make My Money Matter campaign has just very recently published a note of the top 20 UK pension funds. So between them, £200 billion of investment, and the Make My Money Matter campaign has been behind the scenes urging them to commit to a net zero goal, and without success. So they have now published the names. You can find it on a very good newsletter published by Good With Money, and money talks. So if you are in a workplace pension, definitely engage with that pension. See in particular where the default fund is invested, because Typically, that's where 95% of funds are held by members, and ask what commitments the pension scheme has made to net zero, because the chances are that your workplace pension is holding a great deal of your overall investment portfolio.
Absolutely, yeah. Pension funds, one of the enormous actors in all of this. Jeannie, I wonder if I could come to you for the next question. I mean, one of the things that puzzles me is around the green investing debate is that when it comes to many active funds or portfolios, we're looking at companies, equities or bonds in the secondary market. Does that have any impact if you're buying shares which are already issued from someone else? Surely the greater impact is being able to put your capital into new projects which can have new impact and can allocate capital to solutions which weren't there before. What's your thoughts on that? And and are they being provided for these kind of projects?
You're absolutely right. The best ways for investors to have an impact is to invest in private projects like that for new projects that didn't exist before. However, for most retail investors, that's too high risk. The chances of not being able to get your money back are too big. So we use the retail market. And I think what's useful in terms of retail investors investing in liquid markets is it shows the market generally that people are interested in making these choices with their money. So if capital flows to well-run businesses, they benefit from that. And the cost of capital to businesses who aren't addressing these issues becomes higher. And we see it in things like increased insurance costs for coal mines. We see it in terms of people being voted onto boards that we had with Exxon recently, and someone who was added to their board. There are impacts that emerge from investing via the secondary market. And I think for a lot of retail investors as well, who are concerned about their own personal carbon footprint, there's a level of comfort involved in knowing that their investments are supporting the businesses that are doing the right thing. We would love to see more opportunities emerge for retail investors to get involved in some of these smaller projects, but I think there needs to be some work done. And this is where I think pension funds can play a really big part in helping to direct capital towards startup projects that really are making a big impact on climate change. And we'd really welcome that.
Excellent. Ross, could I turn to you? I mean, we've talked a little bit of slightly the abstract asset allocation level. What are some of the, I mean, aside from your own fund, obviously, what are some of the alternative investments out there which you think are interesting, or ways that investors can have a big impact and sort of open up to any asset class where an investor might be able to put their money into?
So I'm obviously, biased insofar as I spend the majority of my time working in that physical asset sector, but I'm a big fan of it for so many reasons. And so sticking outside of my own fund, I think anything that is tangibly adding additionality. So what we've talked about so far in terms of being a new project, being new capacity that's coming online, is a great thing for society. Continuing to support the stability of those platforms that are already invested in the green economy, again, I think are hugely valuable to investors as well. And there are plenty of them out there. I think when Jeannie makes a good point about investors being able to delineate between the kind of mature bits of the sector and those new projects that are additional and a bit more interesting, and a challenge for investors for retail investors to get in there. Well, I think I see pension funds being or certainly maturing quickly towards identifying those opportunities that present that right risk reward profile paired with the right ESG metrics and being able to weave them into the portfolio, but they're at the very start of that journey, right? So agreeing again with what everyone has said, from my perspective, working with your pension providers, with your IFAs to identify those opportunities and ensuring your capital is being presented into them and that you are pressuring for more products in that space is the way to have max impact, rather than picking one particular component of the sector. I think it will be a fascinating economy as it continues to evolve. The technology is advancing significantly across the entire circular and green economy, and that presents a whole host of opportunities and risks in that process, which makes investing interesting, right? So I think it's certainly the place to focus from a moral perspective, but it has to also be the place to generate significant returns out into the future.
Absolutely. Tanya, speaking about those returns and the nature of those returns, when you have a client who comes to you and says, "Look, I want to have an impact. I care about the green economy. I'm all in, but I also want a sustainable income in my retirement." How do you marry those two things? Is it tricky? Do green investments tend to focus on growth and not always best suited for income, or is there a happy medium with certain asset classes?
It's an important question, and it's not tricky at all. In fact, the investment fundamentals are generally the same. They are risk-adjusted, long-term, sustainable returns. And certainly my client portfolios have strongly outperformed inflation over the years past, very healthy returns, and what perhaps for many is more important, the downside risk has been much lower than the market. So falling less than the market, falling for less time than the market, and when the market is on the rise, outperforming the market. So on both sides. In terms of the options, because clients come at different times of their lives or have different objectives for different parts of their portfolio. Some want income, some want capital growth, others a blend. There are sufficient options out there, and there are innumerable combinations that you can make. And clients come with all kinds of different views and values. And I'm sure that Cleona and Jenny would say the same. We are not the moral police. We are absolutely open to people's views, which may change over time also, and customizing their portfolios so that they meet and exceed their investment objectives, but also give them the peace of mind that the legacy they leave, what lies behind them as they move through life, is something that they can look their children and grandchildren in the eye and feel at ease with.
Yeah. Cleona, we've talked about this before, about, I suppose the question for some investors being, I mean, there's always going to be a degree of harm almost in anything we invest in or do, any footprint we have in the world. I mean, investing in Ross's fund, for example, I mean, to build a solar farm, you still require resources, got to be dug out of the ground. That has different kinds of environmental impacts. How do you, when you're working with investors and clients, help them to balance the sense, some of those trade-offs, and identify the level at which they're comfortable with investing, and say, okay, there's going to be some damage, but this is, I'm still happy with this this portfolio.
Yeah, I think my colleagues here will agree that part of our role is educating clients on what's possible and what's available, which is slightly limited by the reality of the world that is here now. And we can't completely eliminate fossil fuels because let's say you order something to get delivered at your home, it's driven in a car, and so there's a certain element of you can't be black and white about this. It's sort of going towards the world that we want to live in, but not exactly the vision that you might have. And so that's sort of the conversation I have. And of course, you eliminate most of the baddies, like if a client says, I don't want any fossil fuel, like oil and gas companies, can be eliminated. But it's just being clear about what's possible and what's not. Also, sometimes if a client's unhappy, for example, I had a client who was the CEO of a human rights company, and he noticed that the Sustainable Energy Fund had quite a lot of stuff in Congo, and he wanted to know, how are they managing the human rights, how are they managing conditions in the mine. And we asked questions to the fund managers. So if you are uneasy about any aspect of your investment and you see something on the fund fact sheet that you're not comfortable with, write an email and get an answer. And if you're not happy with the answer, don't invest in that fund. That's sort of how I see it. So I encourage my clients to also be skeptical about the fund fact sheet, read it and be comfortable with it. Because if you see that, I don't know what's going through their mind. Everyone's ethics are so personal.
Absolutely, yeah. I suppose that, that is... Sorry, Ross, were you jumping in there? Yeah,
can do. Yeah, so I agree with all of that. I think from my perspective, what you should really be looking at is investment managers who are mission driven. So if I look at Next Energy, for example, we at the core of our business, we are trying to transition the planet to a more sustainable future through the nexus of renewable energy, and that's at the core of absolutely everything we do. So we specialize. I can give you so many renewable energy geeks in our business and passionate ESG individuals, as well as those who kind of support the rest of the function. And everyone shares that same drive, and you get that reflected in the way in which we run our business, we make investments, we drive returns for our investors, and also how we report, and it's this whole package of opportunity for investors to look at exactly what we're doing on a granular basis, and we are really open to that dialogue with investors as well, right? So everything from our retail platform perspective allows investors to ask us direct questions. They will inevitably come to me or the CEO or Pete in our PR team, and we will come back to you with as much as we can in terms of information on what we're doing. We're really passionate about that journey. So from my perspective, what I spend a lot of my time doing in my own portfolio is trying to identify similarly minded organizations and individuals. It's not necessarily the biggest, it's not necessarily those most niche players, but those who are mature enough to be able to deal with all aspects of their supply chain, understand the ESG challenges they've got, and have the maturity to report it cleanly on a consistent basis. And I use that as my kind of benchmark for identifying those players that really are making a difference.
Sure. Jeannie, I want to finish with you a separate question I have, but just on that theme of engagement, Tanya, because you were talking a little bit about engagement earlier and around pension funds. For an individual investor who invests on their own account and they're managing, they manage their shares or asset allocations themselves, what are some of the avenues or methods you would advocate for them if they want to be engaged to the, I suppose, the level that that some of Ross's investors are? Okay, that's a different story. But there are lots of because it's a renewable energy fund, lots of companies which investors hope will be doing better. How do you engage the management teams there to progress their green economy strategies?
Yeah, that's a really good question, and it's difficult to do as an individual investor. There's a great organisation called Share Action who I think are brilliant at putting proposals at company annual general meetings. So at EQ, we've just worked with them to put a proposal in front of Sainsbury's around the living wage. And you can get involved with them. You can turn up to an annual general meeting. You've got the right to vote and participate. The other way you can do this is look for as I was saying, mission-led investment managers who will get involved on your behalf. It may not be quite the same thing as doing it yourself. And to follow up on Ross's point, there's been a huge explosion in the number of funds that have been relabeled as somehow ESG over the last couple of years. I think in 2021 there was something like 300 changed their name to highlight their green credentials, and it's a really good way to tell whether someone is genuinely excited and committed to a transition-based economy, is to ask how long they've been doing it and where their own money is. So I think
2020 being the cut-off period, then, yeah.
There's been some great strategies launched, but I think where alarm bells ring is if something's just changed its name. Right. And hasn't fundamentally changed the investment strategy, or most of the holdings are still the same, then what's actually changed here is a good question to ask.
Yeah.
but working with people who are prepared to use collective voices to create change is a great way to engage with companies.
Yeah, great stuff. Tanya, maybe I'll put that question to you as well, but maybe at the slightly more direct AGM level. We've talked a little bit about fund managers and pension funds. What are the sort of direct company engagements that investors can have?
Well, there's a marvelous list of questions on the Share Action website, which covers a huge range of subjects. So it might be about working conditions, it might be about pollution control, might be about the governance of companies, whether they have a gender balanced board, for example. But I can tell you from the other side of the table, some years ago, I was the advisor on sustainable investment to a £9 billion pension fund, one of the largest workplace pension funds in the UK, not on Make My Money Matters a list of 20 ones that haven't committed to net zero, I'm delighted to say. And I can tell you that even a single email from a single pension fund member or a single retail investor makes a difference. So don't feel that you are powerless. Actually, it's your money. You have a right to ask questions, and the role of the pension funds, same as fund managers, is fiduciary. They have a legal duty to act in your best interests. And if you feel that your best interests long term are not being served because they are investing without, as Ross said, a mission, or without looking long term to the future, then simple email or a phone call or collective action through Share Action.
Absolutely.
Make a difference.
Thanks, Tanya.
Can I quickly add?
Just going to jump into a couple of questions. Yeah, please,
sure.
Cleona. Yeah, and then we can jump to a couple of questions from the audience. We've got a couple more minutes.
Okay. I also wanted to add that we need to break this taboo about not talking about money. Don't be afraid to have conversations, because we won't be able to change the world we live in unless we have unless we are able to influence our friends and family. Like, one of my clients actually challenged me on my bank account. I was being loyal to HSBC because I worked with them for 6 years, and he was like, "Why do you have this bank account?" And I switched over to an ethical bank account because of one simple conversation. And he did it in the most kind, non-lectury way, so we need to talk more about money with each other also.
Absolutely. Good principle in all areas, not just green economy questions. So we've had the results of our poll back. Good to hear no one cares about impact and that investments are solely about returns. Similarly, no one voted for the fourth option, which is that investments should seek to maximise positive impact, even at the cost of low returns. The balance, well, 80% of you who were polled said, I balance impact concerns with returns to make the best investment choices. So I think that probably reflects some of the feedback we've had from this session. I'm just going to pick up one question here. Lots of really good questions. One question we've had from someone watching in: why are electric cars considered green? Why are they being so heavily pushed on us when they are clearly a threat to the environment? I don't know if anyone's got any thoughts on what has become, I suppose, the poster child for the green economy. But yeah, I mean, as they make the point, there are lots of trade-offs there.
I can take the start of that if you like. So there's often a mistake in calling them zero emission vehicles, and I think it's important we get away from that. The electric vehicle community is trying to ensure we are using the right terminology. It is, of course, not guilt-free getting in your car, right? And society, again, as I've said a bunch of times so far, needs to change its behaviours, right? So if you can, get there by using a bike or using your legs to get there, then you should do it, right? And we need to get out of jumping in the car and going 2 minutes down the road and all that type of stuff. However, the electrification of GDP is a very good way for us to materially decarbonize quickly. And therefore it is the logical next step on the journey to making that societal change.
Sure. Ross, I'm going to have to cut you off there. Thank you for that. That is pretty much all we've got time for, I'm afraid. So just to remind you, this session is going to be on demand for 30 days on the webpage you're currently watching this on. Feel free to share it with your network, friends or family if you found it useful. Thanks again to my panelists. You've all been excellent, Cleona, Jeannie, Tanya and Ross, for your insight. Thanks again to Next Energy Capital for sponsoring the event. The next session today with Mary McDougall is going to be on shortly and is on the opportunities in the post-pandemic healthcare market. I'd also like to flag an event I'll be hosting tomorrow at 10:35 on aligning with net zero, making the most of the global transition, which has some crossover with today's session. Other than that, it just leaves me to thank my guests one last time and to all of you for watching.